Hey traders, Jason here from Leavitt Brothers. The bearishness on Wall Street isn't going away, and while I like the bearishness because the more non-believers there are, the longer the uptrend will last, you don't have to be among the bears who are either short and losing money or sitting on the sidelines not participating in one of the greatest rallies in history. Okay, in this video, I'm going to discuss market tops. More specifically, I'm going to explain why a top is not forming and likely won't form for at least another year and likely much longer. Tops have characteristics that just aren't present right now. Let's discuss some of them. Okay. Number one, tops take time to form. Pretty simple. Let's look at the last two major tops as examples. Here's 1999 and 2000. Even though many dot-com stocks were grossly overvalued, and when I say overvalued, I mean companies that had just a handful of employees and no sales were worth hundreds of millions of dollars, it still took a long time for a top to form. The rectangle drawn here is relatively small, but it's still more than a year in duration. Heck, I could back it up and draw a bigger one and it would still be legit. Bottom line is, even though prices were ridiculously high and everyone was talking about a bubble, it still took well over a year for a top to form and for the market to head south. Here's 2007, 2008. Again, I can draw a small rectangle like this one or a bigger one like this, and it wouldn't matter. Despite housing prices being out of control and there being tons of problems within the financial sector, it still took 1 to 2 years for a top to form. Here's today's chart. There is no evidence whatsoever a top is forming, or even in its beginning stages. Since tops take time to form, even if one was starting to form right now, okay, like this, you could expect at least a year of up and down action before the top officially resolved down. This is the worst case scenario, that at worst we're in the beginning stages of a top and it would take another year. It's entirely possible the trend just continues. Okay. Number two, volatility increases significantly. Here's 1999, 2000 again. Look at all these moves. Okay. First, there was a 23% drop in 1998. Then, after rallying for an entire year, there was a 13.6% drop, and that was followed by a better than 20% rally, which was followed by a better than 10% drop, which was followed by an 18% rally, which was followed by a 14% drop, which was followed by a 14% rally, which was followed by an 18% drop. Okay? As the top was forming, there were huge moves in both directions, repeated 15 to 20% moves in both directions for about 18 months before the market officially topped and started heading down. Here's 2007, 2008. The moves weren't as extreme, but there was definitely a character shift. Okay, first there was a 12% drop in the middle of 2007, then there was a 15% rally, then a 20% drop, then a 15% rally, then a 16.5% drop, then a little 9% rally, and then the market fell apart. And that was only step one of falling apart. It actually rallied a little bit and then it fell apart again. Okay, so as a top was forming, there were numerous swings in both directions. This is how tops form, big volatile moves in both directions. Here's today's chart. Okay, I don't see any big moves the last 18 months. Yes, there were a couple moderate moves in 2015, and they certainly could be the first crack, but as of now, since there haven't been any follow-ups, there's no evidence today's chart matches the characteristics of the charts of the last two drops. At most, there were two relatively small drops last year that were much smaller than any of the drops that occurred during either of the last two market tops. Number three, the market's breadth declines. Okay, market breadth gives us a look under the hood. It tells us what the participation rate is. It includes the advanced decline line, advanced decline volume line, new highs, new lows, other readings that give us a glimpse of what's going on beneath the surface. In 2007, while the market was topping, the AD line declined for 9 straight months. Okay, this is the weekly chart. This isn't the divergence that occurs over the course of a couple weeks. It's a divergence that occurs over the course of many, many months. Today, the AD line is flattened out some, but it's still moving up. If it takes a divergence lasting many months to put a top in place, we're not even in the beginning stages. Here's 2007 again. While the market was topping, the average true range was steadily moving up. Markets move up on low or declining volatility, and they move down on high or increasing volatility. In 2007, vol increased for an entire year before a top was put in place. Today, vol is declining, which is exactly what you'd expect from a strong and healthy market trending up. In 2007, while the market was topping, spikes and new highs were coming in at lower levels. So with each attempt to move higher, less stocks were coming along for the ride. Today, a similar situation exists. Okay, we've been getting lower spikes. Okay, we know this. The market is top heavy, being dominated by big cap tech stocks. But the situation today isn't nearly as bad as it was in 2007. Here's the 2007 chart again. Not only was there a lack of spikes, the readings were mostly low. The blue box drawn between 0 and 75. You can see most readings are in the box. The same box drawn today highlights a better situation. There are virtually no low prints, so while spikes have come in at lower highs, the lows are maintaining a decent level. Okay, there are other signs of tops. Okay, but but in the interest of not having an extremely long video here, I'm gonna cut it off here. Okay, tops take time to form, and with no evidence of tops, odds heavily favor continuation of the current uptrend. Even if a top was in the beginning stages, it would take at least a year to form before the market started heading south. Okay, don't believe all the bearish talk out there. Okay, and there is a ton of bearish talk. The trend is up. Buy breakouts, buy dips, repeat, repeat, repeat. This hated rally is likely to continue. Okay, come join us at Leavitt Brothers. Okay, we publish daily and weekly reports to keep you on the right side of the trends and trading and investing ideas to help you outperform the market. At LeavittBrothers.com, everything is included in one subscription. Weekly reports, daily reports, trading and investing ideas. We have a message board where traders hang out and chat during the day. At LeavittBrothers.net, wrong slide. At LeavittBrothers.net, everything is unbundled. Okay, so you can subscribe to just what you want. If you only want our weekly report to get our overview, fine. If you only want our stock picks, great. Okay, at the .com site, everything is included in one subscription. At the .com site, everything is included. At the .net site, everything is unbundled, so you can subscribe to just what you want. Come join us. Come join us. Let's make some money together.